Hi, welcome again to another edition of Market Analysis for today, November 30th, end of the month. I'm Giovanni Bettencourt, analyst, trader, and educator with Vantage Markets. Well, let's begin talking about the markets. Watch for clues. Powell is set to cement expectations that the Fed is not about to pivot and will keep tightening. He may, however, indicate that the next hike will be smaller. Data today, including the ADP jobs report, makes signal downshift in activity in Bolton Fed Doves. This number comes out at 127,000, way below consensus of 197,000. But there is a Q3 revised GDP of 2.9, or from prior 2.6%. So that revision sure has helped say that the consensus for the growth of the economy is very strong. So that should help us with alleviating some of the pressure about a recession, perhaps. Now, futures did climb and the dollar did fail in anticipation of the 1:30 p.m. speech. The analysts said the mood was cautious. European shares rose the most in more than a week, with sentiment sheared as euro area inflation slowed for the first time in 1.5 years. Right now, I'm thinking about how one of the most historically reliable recession indicators is flashing its loudest warning in decades. And guess, well, you'll be ready if your mind turned it to the bond market. Treasury yields a few days back saw their most extreme inversion since 1981. That's back when Paul Volcker was Fed chair, and unemployment reached levels that surpassed those of the great financial crisis. Now, commentators remain split on whether a recession is in fact impending. To find out more, later today, I'll be listening to Jerome Powell's speech at the Brookings Institution in Washington. Now, he's expected to touch on the labor market while also reiterating that central bankers will continue their inflation battle well into 2023. But for this morning, let's turn our attention to oil. European governments still can't agree on a price cap for Russian oil, even as the December 5th deadline is less than a week away. Nations were supposed to announce a decision last week, but so far have remained mum on the matter. There is a divide on how low to set the cap. A higher price ceiling will minimize damage to European energy flows, but a lower cap will mean more pain for Moscow export revenues. Poland, for example, is committed to a $30 price cap. The Poles are completely uncompromising on the price without suggesting an acceptable alternative. Clearly, there is growing annoyance with the Polish position. Ukrainian President Zelensky, too, has insisted on a cap as low as 30. He said last week that a limit being considered as high as 70 was a concession to Moscow. Even with a price cap of, say, 65, it's unclear whether that can really make an impact, given that Russia's flagship crude oil, Urals grade crude, is trading 20% below that level already. Either way, as European nations debate the particulars, the EU is still scheduled to begin an embargo on Russia's seaborne crude starting December 5th. And yet, Russia remains on track this month to ship its highest amount of oil products since launching its war on Ukraine earlier this year. Despite the West's repeated condemnation of Russia and President Vladimir Putin, Russia remains Europe's largest single refined oil products supplier. Now, let's get into the Christmas mode for the equities market. The last month of the year is typically one of the best for the stock market, with an average gain of 1.7% in the S&P 500 since 1928. The index has risen in more than 70% of past Decembers. Yet this year, there's a risk of recession ahead. Treasury yields are the most inverted since the early 1980s, a very strong signal from the bond market that a downturn is coming, implying that the Fed will have to cut rates in the foreseeable future. To be sure, for now, the Fed sees its job as being far from over. St. Louis President James Bullard sees rates above 5% well into 2024 to keep a lid on price increases. Even if the U.S. inflation rates have started to come down, and inflation may not have peaked in other parts of the world. European Central Bank President Christine Lagarde said yesterday that consumer prices could still surprise on the upside even after hitting a record of 10.6% last month, though the inflation rate cooled a bit to 10% in November. Retreating oil prices will help bring down inflation rates in the next few months. But it's also possible a lot of damage has already been done to consumers and companies that has yet to show up in data. It would be nice to have a Santa rally, but a festive boost can disappear as magically as it arrives. So with that being said, let's take a look at what the markets are looking to do today. Yesterday, I started my analysis about giving the Nasdaq a support for 11,500. The market did came and violated the support. However, it never closed below it, so therefore it was not broken, was violated. So the market closed above it, therefore it remains our support. As we see, markets in this last half an hour after the GDP revised information came out has been positive. The market is recuperating from this lower movements of the previous half hour, but let's see if that will rush into the open in 10 minutes. The same goes with the S&P 500. Let's take a look at crude oil, because crude oil did, however, made a nice pop to the upside, breaking that $80 psychological resistance that we had set for yesterday. The crude oil, with the news and whatnot, is looking to move higher. Now, let's see if this momentum will continue, or will it be just really quick profit taking and then bring price back below 80, back down to our pivot point, and perhaps even lower down towards our support level. That could be one scenario. Another scenario could be that market will continue to make its move, is rally to the upside and continue and hit that $82 marker. But that's the other scenario. Or the third scenario could be that market could pull back down to 80, okay, which is now which was our previous resistance. We could call it now a psychological support at $80 and just straight consolidate around $80 and just do a range or lateral movement. Then we have Nat Gas. I'm still looking at Nat Gas just to stay below $7, right around 670. Right now it's fluctuating to the upside, but that could just be some movement. Just I don't see really any really major movement to the upside. Everything is looking for actually to see if it'll pull back down to 650. But for right now, I'm just looking at to do a consolidation ranging around 670. However, for gold did retreat to the previous half hour, but now it is looking to have created a nice little support around the 1754. I'm gonna bring up my support level to 750-ish right here. Okay, and I'm gonna stay my resistance at 1770. So silver did, however, made a nice rally to the upside. We had our resistance at 2150. It has broken because we have candles close above it and the market is above it. We're gonna change that and call that our support now. I'm gonna put $22 as my psychological resistance level, and that's what it is looking to do so far to the upside. So I'm bullish on silver. Copper, I'm bullish on copper. I like copper. So I set my 370 for support, 378 as my resistance. Perhaps we could probably see a nice rally to the upside for copper, and perhaps we could as the week moves on, we could probably see it right around reaching, see if you come back to $4. But for now, I'm looking at 378 to be my point, my target. Bitcoin did yesterday fluctuate over to our resistance of 17,000. It fluctuated right above that a bit. It retraced from it, 16,800 is supposedly right now our support level. Will this continue to do so? It could be the case. It could be the case that it'll continue to do like this, just a consolidation, ranging, horizontal movement, lateral movement, however you want to call it. That could be the case. Then we have the euro. Euro is looking really to stay above 103. That 104, it has been really nearly visited, nearly reached, but it has been hasty for now. The pound, 120 is my pivot point. I see the pound just really doing a lot of this right here, just a lot of ranging, just very tight range. Because the dollar index is looking to consolidate itself right around 1650. That's the consolidation for the dollar index. Well, that's my analysis for today. I wish you a fantastic trading day, and I will see you tomorrow. Have a nice day. Have a nice trading day. Cheers.